If you want to day trade, you have to choose your battlefield, futures or stocks. And they are not the same game. One gives you round-the-clock access and built-in leverage. The other gives you thousands of choices but more capital requirements. So let's settle it. Futures versus stocks for day trading. Let's define the matchup. Day trading stocks means buying and selling shares of individual companies, Apple, Tesla, Nvidia, within the same day. Day trading futures means trading index contracts like ES and NQ, or commodities, that track something bigger than a single company. Same goal, buy low, sell high within a session, but very different mechanics. Round 1, market hours. Stocks trade during regular market hours, 9:30 a.m. to 4 p.m. Eastern, with limited pre-market and after-hours sessions that often have thin liquidity. Futures trade nearly 24 hours a day, Sunday evening through Friday afternoon. If you work a 9 to 5, or you want to react to news at any hour, futures give you access when stocks are closed. Round 1 goes to futures for flexibility. Round 2, leverage and capital. Today, trade stocks actively, you need meaningful capital in a margin account. Futures have built-in leverage. A single ES contract controls about $250,000 of exposure for only a few hundred to a few thousand in day trading margin. And with micro contracts, you can start small. Futures win on capital efficiency, but remember, that same leverage cuts both ways. Round 3, choice and variety. This one clearly goes to stocks. There are thousands of stocks to trade, each with its own story, sector, and catalyst. If you love variety and hunting for the next mover, stocks offer far more opportunities. Futures are far more limited. A handful of major index and commodity contracts. Futures are focused. Stocks are a buffet. Round 3 goes to stocks. Round 4, taxes. In the US, futures get special treatment. They're taxed under what's called the 60-40 rule. 60% of gains treated as long-term, 40% as short-term, no matter how long you held. For active day traders, that's often a lower blended tax rate than short-term stock gains, which are taxed as ordinary income. Round 4 goes to futures. Round 5, simplicity for focus. With futures, most traders focus on just one or two instruments, like ES or NQ. You get to know that one market deeply. With stocks, the sheer number of choices can be overwhelming for beginners, and you can spread yourself too thin. For focused day trading, futures make it simpler. For flexibility, stocks give you room to roam. Let's tally it up. Futures win on hours, leverage, taxes, and focus. Stocks win on variety and choice. So, who should trade what? Final, futures 4, stocks 2. If you want to day trade around a job, start with limited capital and focus deeply on one or two markets, futures are likely your better path. The nearly 24-hour access alone is a game changer for anyone who can't sit at a screen from 9:30 to 4. If you love researching individual companies, want thousands of options, and you have the capital to trade stocks actively, stocks might suit you better. There's no shame in either. They're just different tools. But if you're here on this channel, you probably already sense why so many day traders gravitate to futures. The access, the efficiency, and the focus are hard to beat. So that's futures versus stocks for day trading. If this helped you decide, subscribe. We break down futures in plain English every week. Free weekly recap in the description. Points and ticks. See you in the next one.